Then I did my specialization in economics and finance, and then various courses on Islamic banking, and learned from the scholars. And I'm very pleased that Dr. Usmani, who's sitting here, and I've learned a lot from the book which he has written and directly from himself. After almost spending 12 to 18 years in investment banking, one of the things which I've noticed in Islamic banking, there's not much innovation. I hope you all agree with me here. And why is not innovation? Because we are still following what the conventional banking is doing. Rather than coming up with the new products, new ideas, we are still the followers. But how we change this culture? This is a legacy which has been going from last 30, 40 years. In last 4 or 5 years, I've been involved in a technology fund where we were investing in various fintechs and blockchain entrepreneurs. And this is where I've realized, I think this is what something, the answer for Islamic banking to take on to the next level. And I personally started learning about blockchain and fintech, did various courses. And finally, end of 2018, I relocated back to London and decided to take a sabbatical from the industry and do something different. And hence, the origin of Cykube arises, where the focus is to do Shariah compliant fintech and blockchain solutions, take it to the market. It's not the demand driven, because we know the industry well. So what we are trying to do is to build a solution and then take it to the market, not the other way around. Before I get into the topic, just to tell you a bit of housekeeping, please switch off your mobile phone because we are in the technology event. Secondly, this is, I always wanted to make an interactive session where we all engage and talk. So for first 15-20 minutes, half an hour, I'll speak, and then we will have a dialogue. But this dialogue will be a different. So here you won't ask question, I will ask question. Are we all ready for that? Good. Right, okay. So as we all know that technology is revolutionizing the financial world by bringing more transparency, efficiency, and trust in the systems. Now if you look at it, what happened in 2010, 2010, financial crisis. There was one report by BIS. There was only the future and options market, the derivative market, which was 10 times of the global economy. How come it's possible that you have the wealth which no one owns it? What was the issue there? Transparency. There's no transparency. You have 100,000 pounds in your accounts, but you are trading tens of millions. And that brings you to the stage where the whole system collapsed, almost. In parallel, if you look at the Islamic banks were progressing around all this time. They were growing, and of course there were implications because of the global system, but in reality, Islamic banks were not as hurt as the conventional banks. Now, and the conventional system, they have realized what was the problem. And they said the transparency. Now the reason I talked about transparency here, and that exactly what blockchain is bringing, transparency. So what is blockchain? So before I go to blockchain, I divided my presentation into 3 parts. So first we talk about blockchain, then we talk about smart contracts, and then we talk about some of the use cases. And the idea here is not to pitch, not to sell anything, but when you all go out of this room, so you must have a little bit knowledge of blockchain and smart contracts and how it will be beneficial for Islamic banking industry. So let's get into blockchain, what exactly blockchain is. So as the definition says, blockchain technology can be viewed as a distributed ledger of information which maintains a continuously growing list of records called blocks. And all these blocks are secured from tampering and changes. Each block contains a timestamp and a link to a previous block. This means that blockchain are inherently resistant to modification, is immutable. Once recorded the data in a block, it cannot be altered retroactively. So one of the key feature of blockchain is the immutability. You cannot delete, you cannot alter, or you cannot change the data once the data goes into the blockchain. So at any point of time you want to refer that 10 years back, let's say you have invested 100,000 rupees at such and such time. So you can refer back to the data within seconds. Within seconds, you can literally on the click, you can go and check when that investment has been made. So what blockchain is bringing? Transparency. And we will get more deep into it when we move forward. So how many people knows about, or how many people thinks blockchain and Bitcoin are the same thing? Raise your hands. Do you think blockchain and Bitcoin, they are the same thing? No? Everybody? Absolutely. Right, so Bitcoin is just one of the application of blockchain. Everyone is talking about cryptocurrencies, Bitcoin. One of the things which I wanted to highlight here, without getting deep into cryptocurrency, yes, cryptocurrency potentially is going to be a future, as we are talking about blockchain. But the dilemma we are again in, that we are trying to justify still that Bitcoin even is Sharia compliant. Although the Western world, people who have originated Bitcoin, they are even saying there is no justification of Bitcoin because this is not a currency. This is an investment tool at the moment. Why don't we encourage? And from this platform, I would like to encourage you all, whoever are studying or researching, to study asset-backed cryptocurrency. Why not? So you can issue the cryptocurrency using real estate. You can issue the cryptocurrency using gold or any of the commodity. But unfortunately, as I said at the start of my presentation, we are followers. We are still following. No, this is where the time where we as an industry can stand and come up with asset-backed cryptocurrencies. And there's no question of Sharia. And of course, I'm not a Sharia scholar, but whatever we have learned in our capacity, there won't be an issue. But of course, Bitcoin, I'm glad that you all know what Bitcoin is. Just wanted to put some numbers in front of you. So $176 billion is the business value of blockchain anticipated by 2025. 3.1 trillion is the business which adds value, which is added value for the businesses by blockchain by 2030, which is a huge number. And this is a very interesting number. Again, only 8% of the leaders currently are in a short-term planning on execution blockchain. This is the dilemma. And why is that? We will see on the next slide. So this is a cartoon which I came across and I thought I should put in front of you. In a nutshell, I'll tell you what this cartoon is all about. This cartoon is saying there is a strong need for education and awareness of blockchain. And this justifies the 8% which I've mentioned earlier. Because the leaders, unfortunately, they don't understand what blockchain is. They all wanted to just jump the bandwagon. That, oh, they are doing blockchain, so why not us? So it is not necessary that blockchain is either good for your business or not. I have personally seen people who doesn't know about blockchain, they just wanted to deploy blockchain. They are the owner of their institution. They said, no, we are going to invest. And they have invested. And what was the result? Nothing. So the key issue which we are facing right now in blockchain is the awareness. People, they don't understand what blockchain is and how it can be implemented. So the key for blockchain to be deployed is to learning, education, and awareness. And engagements like these, events like these, can facilitate the deployment and implementation of blockchain at the wider level. As we just discussed that, what is the business value of the blockchain? Blockchain is predicted to have a paradigm shift to businesses similar to what the internet has on communication. And I'll get a little bit deep into what happened since the origin of internet. So there are three factors. There are three factors which are encouraging to blockchain to be implemented. And the factors are internet, centralization, and trustless world. Now, what internet has done? We all use internet. What do we do? So, today, the internet which we use is all about two things: transaction and data. So how do we use internet today? We use internet for shopping. We use internet for listening to music. We do banking, watching documentaries, films, and social media. All of these activities are transaction based. So as I mentioned, there are two things: transactions and data, and which swiftly bring me to the centralization. What is centralization? As the adoption and use of internet has grown, the largest global companies have been born. Which is the largest company in the world right now? Anyone? Apple. What's the valuation? 1 trillion, right? There are various companies now, that Apple, Amazon, Facebook, Google, Microsoft, Uber, Airbnb, hardly 4 or 5 years old company. They become almost $1 trillion valuation. How? By using whose data? Our data. They are using our data. And what we are getting, apart from watching documentaries or using social media, nothing. Right? And the last is trustless world. I don't want to be political here, but we all are now living in the world where we lack trust in large companies and even the government. In Western governments, I can tell you, there is a huge drive at the moment towards nationalism and localism, which is causing what? Global trade wars, immigration issues. And what happened after that? Governments, they cannot operate effectively in the world. And by looking at these three factors, blockchain, in my opinion, is the solution. Now what blockchain will do, you will be able to own your own data. So you will be the owner of your own data by using blockchain. And you are the person who grant or consent that yes, you can use my data for A, B, C. Going forward in the future, when you go to the shopping malls or to the retail shops, they will offer you personalized for you as an individual offers, rather than you buy it out of various internet sites. But you will be the owner of your own data. And that's what blockchain is bringing, which makes you to create value and transact value of your own data. Now, let's get into what exactly blockchain is doing. What are the characteristics of blockchain? So rather than going on to the transparency and the traceability and the cost reduction, let me give you a scenario. So it will make you understand easily. Imagine you wanted to transfer funds from Bank A, which is in Pakistan, to Bank D in England. Now, Bank A doesn't have a correspondent relationship with the Bank D in England. So what would happen? The moment you give 10,000 rupees to Bank A in Pakistan, they will contact their correspondent bank in Pakistan to Bank B. Then Bank B will contact their correspondent bank, Bank C in England. And then Bank C finally will transfer funds. What happened in all this scenario? Cost. You don't know where your money is. And time. You need money tomorrow. Or you need money today. But you even don't know where your money is. So by using blockchain, what would happen? So in blockchain, you will have a one data. Bank A, Bank B, Bank C, Bank D. They all are the stakeholders of that consortium. And I'll talk about the consortium separately. They all are the part of the blockchain. So now if Bank A wants to send money to Bank D, they can literally just go onto the platform and send the money to Bank D in a fraction of a second. Until even you can trace where your money is. That's the level of details we are talking about. So the first characteristic is transparency. That is the transparency which you are bringing. Immutability. Once the data is there, no one can change the data, which we have talked about earlier. Decentralized nature. Decentralized nature means there won't be a centralized authority. The decentralized means everyone have access to the same data. So Bank A can see what data is, Bank B can see the same data, Bank C can see the same data, and Bank D can see the same data. So everyone can see the one view of the truth. Right? So that is the level of transparency we are talking about. The second point is traceability. For whatever the reason, if there's a delay in payment. So you can, on fraction of a seconds, you can just click and check where the money is. And I can tell you with a real use case, SWIFT, which is the global clearer for all the institutional money, they have come up with a solution where literally you can trace transaction where your money is. So when you send post through TCS, you can see where in which port your post has reached and when it's been delivered. The same way you can see where your money is. You can track your payments. So that has already been started. So that is the level of traceability we are talking about. Cost reduction. There's a very important feature of blockchain is disintermediation. In the same example where 4 banks, you may have noticed there isn't any intermediary. There's no brokers because you are sending money directly from a bank A to bank D. There are no brokers, and that's what blockchain is bringing. Right? Disintermediation. There won't be any. I shouldn't say there won't be any intermediaries, but it will be their reduction of the intermediaries, and which makes the process more efficient, and cost, of course, being reduced. Efficiency we'll talk about in next slide with the smart contracts, that how it will be efficient. So before I move to the next slide, these are some of the major blockchain platforms. So you must be thinking, what is blockchain? Where you can find blockchain? So there are various blockchain platforms have been built. So for example, Bitcoin, which is for peer-to-peer transfers of money. Ethereum, they are the pioneers who introduced the smart contracts. Hyperledger is more used for trade finance. and supply chain. And CODA is a platform which is used for financial institutions, or they are promoting themselves. This is one of the active platforms which is being used for financial institutions. And the beauty of the CODA is that you only need to know about the information of others on need-to-know basis. So not on the entire platform, not everyone needs to know who is doing what. Only the concerned people. So for example, again, going back to the example which I have mentioned, there are Bank A, Bank B, Bank C, and Bank D. So here, Bank C and Bank B, they don't need to be involved here. Only Bank A and Bank D, they will need to know the information, and that's it. Right. So that is what CODA is bringing, and we are working very actively with CODA. Blockchain advantages. So what are the advantages of blockchain? Streamlined processes. We have noticed the process has been streamlined by transacting directly, leveraging a smart contract or clauses, which we'll talk in a bit. Reduce complexity. In Islamic banking especially, we've always been told that Islamic transactions, Islamic finance transactions, they are complex, difficult to understand. And sometimes people complain it's not very transparent because of the nature, the way transaction has been structured. So with blockchain, you can manage separate systems maintained by each entity. So here, you are not, again, going back to the same example, where we are transferring funds from Bank A to Bank D. There's only one data, and everyone is using the same data. So Bank A doesn't need to maintain their own data. Bank B doesn't need to maintain their own data. Bank C doesn't need to maintain their own data, and same for the Bank D. So there's a one truth for all the stakeholders. Simplify legacy workflows. Now this is a very important aspect, especially when we talked about the asset management business, institutional asset management business, and institutions who wanted to invest funds. It takes at least 2 to 3 days in reality to invest your funds into the real fund. Why? Compliance, brokers, transfer agents, it takes that much time. With blockchain, what will happen? It improves liquidity and free up capital. When you can see it, or just go back to the same example. Sending money from Bank A to Bank D. If you are getting money within seconds, you can see the liquidity increases how quickly. But in the traditional model, your money being stuck for 4 or 5 days, and you even don't know where it is. And who is getting benefit out of that money or that liquidity? Maybe banks, but not us as an individual. So what blockchain will bring, it improves liquidity and free up capital. Faster dealings, we have already discussed that it doesn't require a lengthy process of verification, reconciliation, and clearance. I'll tell you why it doesn't. You must be thinking, I can see some of the bankers are here, that why doesn't it need verification, reconciliation, or clearance? Why? Because once you are on the platform, you will be only become the member or stakeholder of the platform once the due diligence being done. And once the due diligence being done, you become the stakeholder of that platform. So you don't need to do verification again and again. You don't need to do KYC or AML again and again on the client. Reconciliation, you don't need reconciliation in reality. But again, go back to the same example. When you transfer funds from Bank A to Bank D, Bank A, Bank B, Bank C, and Bank D, in the traditional model, all 4 institutions have to reconcile at the end of the day because they have received funds. So they have to do the reconciliation. But in blockchain model, there will be transfer from Bank A to Bank D, where everything is transparent. You can see the funds have been transferred from Bank A to Bank D and done. You don't need to reconcile, because the system is being built in a way where everything is transparent and you can see exactly what is happening the whole day. Reduce cost, we have talked about, because there won't be intermediaries, which automatically reduce the cost. Reduce time, we have discussed, because of, especially related to payment disputes. Yes, so if there is a payment dispute, you have sent the funds to an institution or to someone abroad, and there is a dispute that they haven't received the funds. But by using blockchain, you can trace, with the traceability factor, you can trace the funds on seconds, that where the money is and why there was a delay. So blockchain key risks and challenges. Of course, with every technology, there are challenges, there are risks which we all need to face. So what are the challenges here? Majority consensus. So I'll read it for you, this one. Majority consensus is need to make any changes in each transaction. It is central to trust but needs enough participant to avoid misadventures. Now, as I mentioned, whenever any data goes into the system in the blockchain, it has to be consented by all the relevant stakeholders. And once the data in the system, it cannot be changed, altered, or deleted. If, for example, there is a major issue and you have to look at the transaction and there were some real problem, then you need to get the consent from the majority of the stakeholders. And once the majority of the stakeholders give consent, then only data can be changed. But again, it cannot be deleted. Can be changed only because there is some real problem. Security and privacy. Of course, we are talking about data here. We know the cybersecurity risk has been increased, and I won't say that blockchain will be immune to it, but I must add that all the transactions on the blockchain, it will be secure by cryptography, and it will be encrypted. And as per one of the studies, to decrypt that encryption, it takes you a number of years to decrypt the data. So that is another feature of blockchain. I'm not saying it's immune, but it's not easy to attack on blockchain. Performance and scalability. Performance is currently one of the biggest issues in blockchain. Again, because this is a new technology, not has been implemented fully and anywhere in the world. There are a lot of use cases we are talking about. There are a lot of pilots been happening. The scalability is the question, but every other day there are new technology and new platforms they are building up, which is making blockchain more scalable. Awareness. As I mentioned earlier, the key challenge is lack of understanding, especially in financial markets. I should say not only in financial markets, in anywhere, in healthcare, in transportation, any business, food security, trade finance. There's a huge scope for blockchain. But until and unless we learn about this technology and we start doing research and development on blockchain for a specific use cases, it will be very difficult for us to adopt blockchain. So awareness is the key. So the more and more awareness sessions required, and we all need to work together to make and take this industry forward. And I think this is the right time to talk about the consortium. I take blockchain is a family. If someone, and I'll give you an example, a very good friend of mine, he deploys one of the largest, or he's working on one of the largest deployments of blockchain in Middle East, in UAE. And I was talking to him, I said, how is it going? He said, brother, it's doing very well. I said, wonderful. He said, how much you have spent? He said, millions. We have no issues of liquidity. I said, good. I said, have you started the pilot? Yes. How many people are using it? Very few. And I've asked the question, why? He said, because people, they don't understand. Right? So this is what blockchain consortium model is. You cannot build the blockchain because you have few $1 million and you just say we have built it and now everyone have to use it. No. So blockchain will be built with a consortium. So you need to bring all the stakeholders together. So if you're doing a trade finance business, you need to bring buyers, you need to bring sellers, you need to bring banks, you need to bring shipping companies. They all need to be part of it. And you need to consult. You need to bring all of them on a one platform. You need to tell them what you are doing and what are their concerns. And when you build a platform, all their concerns needs to be deployed as a software or as a blockchain. And if you don't do that, then these people won't use it. And if they won't use it, there won't be a blockchain. So that's why blockchain is a consortium model. So if every bank has started saying that we are building our own blockchain, that is not going to be successful. And this is another issue of blockchain, where lack of cooperation. And lack of cooperation won't take you anywhere. As we talked about correspondent banking example, Bank A, Bank B, Bank C, Bank D. If Bank A would say, I'll build my own blockchain, Bank B would say, we will build our own blockchain, it won't be successful. But you need to build a consortium where all the banks, and that consortium would be specifically for one particular topic, for correspondent banking, right? Or for the fund transfers, or maybe for trade finance, or maybe for the halal economy, right? Maybe for Shariah asset management. But we need to bring all the stakeholders for Sukuk issuance. For Sukuk issuance, for example, as Ahmed mentioned. For Sukuk issuance, it's very important that, first of all, who do you need? Seller and issuer. Sorry, issuer and the buyer. Once you have these two parties, then you need to see who the banks will be. Who are the other stakeholders who will be part of that Sukuk issuance process. And if these people are not aligned, maybe you will be able to build a wonderful platform, but you won't be able to make it scalable. So for every topic, for every transaction, I shouldn't say transaction, for every either it's asset management, trade finance, healthcare, you need to build a specific blockchain model, and you need to make all the stakeholders aware that what this blockchain is going to do. So that is the consortium model, which I personally believe, and of course the industry is talking about it, especially there are a lot of research and development going on in the UK. I'm part of the consortium which has been built by one of the largest universities, UCL, Retail Blockchain Consortium, where they are bringing all the retailers, likes of Sainsbury's, Tesco's, Asda, Harrods, Selfridges, all of them, all the retailers, they are on the platform. And now there are various working groups have been built to study where are the loopholes, what are their requirements, what exactly are they expecting from this platform, and whether this blockchain platform would be good for them, would be beneficial for them or not. So this is what going forward we need to start thinking about, that how we can build the consortiums, how we can bring all the stakeholders to build the successful consortiums which will be beneficial for all the stakeholders, and we can utilize the real benefit of blockchain. Regulation, of course, we cannot ignore the regulators, and one of the hindrances of blockchain is regulators. And again, education and awareness. If they don't understand what blockchain is, they won't let you build any consortiums or any platforms. Because what we are talking about so far is a centralization, and we are talking about decentralization. So it's not that there won't be a role of central banks. It will be there, but with decentralization is more will be used for the validity of the data. Some of the use cases of blockchain: government records and spending. There are some pilots being built on international aid, welfare payments, for KYC, anti-money launderings, micropayments, trade finance, and supply chain finance, electronic health records. For me, this would be this is not the topic for this session, but electronic health records, I think, is going to be very interesting solution for people at the wider audience. If you think about it, if you are born in Pakistan and after 20 years you've decided to immigrated to another country, the level of details you will find on the blockchain since the birth, every detail of yours will be on the blockchain. So after 20 years, if you have any issues and you are in Western country or any country, and God forbid, you need to go to a doctor, so normally what doctors ask, you have any allergies, you have any major operations, or anything. So what is going to happen? That they only click and they can check your entire history, of course with your consent. Food and safety origin, insurance payout automation. We will talk about insurance payout in our next few slides. So blockchain benefits are not technology-led. This is a very controversial statement, but I can tell you, yes, this is true. Blockchain benefits are not technology-led. It's not that, like the example I gave you for my friend in Middle East, they have built a wonderful platform, technology platform, but because people are not using, it doesn't mean how beautiful the technology you build, but you need to bring people on board. It is, as per one research, I'll tell you, it is 80% business process change and only 20% is a technology implementation. So what this is telling us, 80% is business process change. So we need to understand the business. Once we understand the business, once we bring all the stakeholders on one synergy, on one platform, then only you can deploy the successful blockchain. Smart contracts. Anyone knows about smart contracts? It seems a bit boring. Are we all awake? Are we? I can't hear it. Everyone is sleeping? Good. Right, anyone knows about a smart contract? Are they smart or not? What do you think? Anyone knows about a smart contract?
Kind of a protocol or something that you use for data storage.
Part of it, yes. Anyone else?
Automatic execution of the contract clauses actually.
Sorry?
Automatic execution of the contract clauses.
Very good, yes.
Rules and regulations that you can define in shape of code.
Very good. That's exactly what smart contracts are. So I divide the smart contracts into two. The smart contracts, they are contracts or not contracts is still debatable. But I can tell you going forward is going to be smart clauses. And the industry is already talking about it because they are not contracts. And why they are not contracts? I'll tell you why they are smart and why they are contracts. So they are smart because of its capacity to make decision from received input and its predefined conditions. And I'll give you an example after this, then you will understand better. And this is we call contract because it refers to its capacity to enforce rules and conditions between its users. So that's what the smart contracts are. So I'll give you a scenario. There's a person who wants to transfer funds every month to his brother, and in the same country or any other country, 10,000 rupees, and he instructed his bank that he wanted to transfer 10,000 rupees every month, every 5th of the month, and they can only transfer the funds once his salary received, which normally on 1st or 2nd of the month, and also his account should have minimum 50,000 rupees, right? If you go and tell your bank manager, the bank manager would say, sir, thank you very much, there's another bank next door. Am I right? Because it's too much. But with smart contracts, you can define this, right? You can define into the contract where once you receive, can you all hear me? Right. So the whole scenario you can define in the blockchain. And this all can be automated. So you transfer 10,000 rupees only when my salary touches my account. Then my account will check, yes, I have 50,000 rupees, my salary has been arrived. Now I can transfer funds. And all the process can be automated. And that is a smart contract. Right? Clear? There's another very good use for smart contracts from the Sharia perspective. The employability of smart clauses gives Sharia boards the opportunity to ensure Sharia compliance by building and mapping real-world Sharia requirements within the structure itself. So now here, and this can be done by taking Sharia guidelines of the underlying transaction and embedding them in the digital contract, thereby ensuring that the transaction is only executed when those Sharia conditions are met. So now here, we have a scenario where Sharia scholars have instructed the bankers. So this is another scenario which is controversial again, where bankers normally say, oh, we have got the approval from the Sharia scholars. They have approved it, they have signed it. Yes, I'm a banker, so I can criticize bankers. But most of the time what happens, they don't even explain the transaction well to the scholars. They explain something and they deploy something. And unfortunately, this is a harsh reality. I'm not attached to any bank, so I can talk about it. But with the smart contracts, what you can do, so when Sharia scholars instructed you, you have to do A, B, C, this can be deployed into the smart contract. And now here you have a full transparency, where if tomorrow any banker would claim that, oh, this is what Sharia scholars have said, so they can go and check on the Sharia audit in seconds that where exactly the problem is, or whether they are right or we are right. So you can prove very, very, very quickly, and again, that brings transparency. And again, smart contracts, they are bringing efficiency into the entire system, into the entire ecosystem. There's another question which always been asked, especially by the legal experts. Are smart contracts legally enforceable? Now this is a very challenging question. They are legally enforceable, but only when it's linked to a binding paper contract. So there is a common misconception, and I'll tell you, I was speaking a couple of months ago in Bahrain. There was a IOFI World Bank conference where scholars, central bankers, and bankers, practitioners, they normally attend. So when I talked about it, so after the session, I've been asked by some of the scholars that you can't do that. I said, but that's exactly what the point is. We are not saying that the whole Sharia contract would be, we build it smart. No. Smart contracts, they have to go hand in hand with the paper contract. So I'll give you the example. Commodity Murabaha. 80% of the Islamic banking industry is dependent on what? Commodity Murabaha. This is the innovation we are doing, right? This is innovation. Where scholars have said very early days that this is not very acceptable form of transactions. But let's talk about Commodity Murabaha. So Commodity Murabaha, you do the Master Murabaha agreement. And then what you can do, you can digitize the part of the contract into smart contract. But you have to have a paper contract. You have to have a Master Murabaha agreement. But you can digitize the part of the contract to make the process efficient. But you cannot digitize the entire Commodity Murabaha, Master Murabaha agreement. Some clauses of smart contracts may be partially or fully self-executing and enforceable. This is exactly what I've mentioned. Sorry, I think there's some problem in the screen. Sorry. Fine. Jurisdiction for enforcement with prior agreement and consent of a parties or successful. Yes. There's another thing which, when smart contract can be enforceable. So it can be only enforceable with prior agreement and consent of a parties. So when parties have consented and when they have agreed that that's what we have agreed with regards to the contract, then it can be executable. But if you are not agreed, then it cannot be executable.
Agreement will be digitized, or the transaction documents will be digitized?
Transaction documents can be digitized. Main document cannot be digitized. So it can be only legally enforceable when the document, when the operational aspects. Let's put it this way: only the operational aspects of the agreement can be digitized. Not the entire agreement can be digitized.
So it will be a duplication of work?
It won't be a duplication. It will make the process efficient. We will go to the question and answers, but it will make the but a good question you have raised. But it makes the process efficient. So today, for example, when you receive funds, you go to your operations, tell them now execute it, then they execute it, then they buy and sell commodities. If you build a platform where everything is digitized, so the moment you have received an order that another institution wants to place $10 million, everything can be executed itself, right? Because the entire process is being digitized on the smart contracts. What are the benefits of the blockchain? And what are the pain points in Islamic finance? Standardization and efficiency. Since last 20 years, every conference, every event we go to, there's a major discussion till today is standardization, liquidity management, efficiency. Now what do you guys think? Can blockchain standardize? After listening to a little bit what we have discussed earlier, just raise your hands. Do you think blockchain will help industry or will standardize the industry? Yeah, very good. That's exactly the answer. And I think on a standardization perspective, I'll talk about a little bit from the industry perspective what is happening. There has been, as I mentioned, there are several discussions, and there are several efforts have been made, and they have achieved their objectives as well. For example, AOFI, IIFM, IFSB, IDB, they are doing a wonderful work. And they're trying to standardize the industry. But I think what needs to be done, what should be the next level, what should be the next stage for the industry? Standards prepared by these institutions can play an important role in harmonization, and I think they do. They are playing an important role in harmonization and creation efficiency in the industry. But to make it more efficient, if we digitize and introduce smart contracts to facilitate the operational aspects of these standards, that will bring the level of efficiency and the level of standardization and transparency, and that brings the standardization globally, right? So today, how many institutions are using these standards? And without naming any institution, I've met recently one of the regulators, and almost 150 institutions they have mentioned they are using their standards. And as per one of the research, I think there are 500-600 Islamic banks currently globally. Now, why not all the Islamic banks are using these standards? Again, adoptability. But let's put it this way. Let's take one step back and think. We build a platform where all these documents have been standardized. All the operational aspects of these documents have been standardized. And you have asked banks anywhere in the world, Islamic banks, to use this platform. Any issues? Any problems? It is vetted by Shariah. They are a standardized document. So what we need to do the next level, to make the industry to the next level, we need to bring this standardization. How we bring that standardization? By digitizing the operational aspects of these contracts, or standards, I must say, onto blockchain. Complex structures, I've touched upon earlier a little slightly. But again, inconsistency of Sharia compliant approaches. Earlier we were talking about, and we have noted, you all may have noticed as well, in Middle East, some of the practices, or in Malaysia, some of the practices not acceptable by scholars. And that creates sometimes bit of confusion within the industry. But as I mentioned earlier, if these Sharia standards can be automated using smart contracts, ensuring requirement for product issuance, what will happen? It will make the process easier. It will make the complex structure easier to understand. There's a lot of conventional banks, Western institutions, they are doing Islamic banking. There are a lot of institutions, even Middle East, who are not Sharia compliant. Now they are looking to start Islamic banking. But what's the biggest issue? Complex structures. Oh, we don't understand. Oh, who is going to do muraba? Right? Because they never did it. And they don't understand. But if you make the process simpler, if you make the process easier for institutions to understand, the adoptability will increase. And that also brings to transparency, which also brings transparency. Right? People always say, if you talk about, oh, we do muraba, oh, Sharjil, this is the same thing. What are you talking about? You buy and sell commodity, then what? Right? The level of understanding is not there, unfortunately. Without exaggeration, 99% when I meet people who doesn't know much about Islamic banking, or even they are into Islamic banking. No, this is muraba, this is just the transaction. Right? This is a makeup. It's not makeup. This is a sale transaction, which people need to understand. No one wants to even read the murabaha contract. Why not? You are a bank. I have seen personally some of the banks, they were using their contract and saying interest in it. Right? We are very good in complaining. But if we as a practitioners, I think this is our responsibility to take this industry forward in more efficient manner by making the process simpler, easier for institutions who are not aware much about Islamic banking and they wanted to do Islamic banking. Liquidity management. We have talked about it, but let's lack of liquidity management, Islamic financial instruments for liquidity management. We have discussed about Sukuk. Issuance of the Sukuk itself, sometimes it becomes a nightmare for institutions. By digitizing the entire Sukuk process on blockchain, you can issue the Sukuk in minutes. Why not? Today we are dependent on bring the mandate lead manager, bring those advisors, bring those legal advisors, bring those accountancy firms. But if you digitize the entire process on the platform and you give this ease to the issuers who wanted to issue Sukuk, who wanted to raise funding, that you can go to this platform, put your requirement, and let people invest. Why not? Right? What it brings? Why it helps liquidity management? Because your money is not tied up. You are not dependent on institutional money only. Today, Sukuk issuance is only for financial institutions. And because there are not many Sukuk in the market, even financial institutions, especially small financial institutions who struggle to get their share in Sukuk. Sometimes they cannot even buy Sukuk for their liquidity management, which is a regulatory requirement, right? But if we digitize, if we make the process simpler for institutions, for corporates, and if you want to raise money, this is the platform. Everything is already being digitized. You can go, you can put your requirement, and you let investors to invest, even retail investors. Man with 1,000 rupees wanted to invest, why not? The level of liquidity which we can bring to this industry, it's phenomenal. Today, how many saving products do we have? Not many. We have term deposit accounts, savings accounts, and that's it. I'm not talking about from the Pakistan perspective. I've seen in Pakistan there are some good work being happening, but in other parts of the world, I can talk to you all day long about Middle East. They don't have any saving products apart from the plain vanilla saving products. Why retail investors cannot invest in Sukuk? Because it's not available for them to invest, right? So I think it will increase the efficiency, of course, liquidity in the system, and make the process easier for investors. Now these are some of the opportunities using blockchain in Islamic finance. Sukuk we have already discussed. I can repeat. Again, smart contracts. Smart contracts to standardize and automate the accounting, which we have discussed, legal and overhead payments of conventional Sukuk offerings. So once we digitize our accounting, legal and overhead payments for the traditional way of Sukuk offering, it will make the process easier and efficient. Ownership status of each SAC and its underlying asset automatically updated. Means if you as an investor go to the platform, invest into that particular Sukuk, SAC is the singular of Sukuk. So it's automated. The moment you invest, your share or your units being assigned to you straight away, without taking the process where operations will send you the confirmation that you have invested, and after 2 days you will send the confirmation that your money has been invested. So what is happening here? The process has become efficient, and individuals who have invested the money, they can see it on real time that my money have been invested and I'm the owner of this Sukuk. If imagine tomorrow the price of the Sukuk increases, that individual get the benefit of it. Right? Single source of truth and transaction record. Again, go back to think about the same example of the correspondent banking which I gave. Single truth. Single source of truth. So, everyone is using the same data. It's not that every other institution is using their own data. Going forward, we all talk about data is a new oil. I literally understand a little bit now why data is a new oil. Because now, going forward, especially with this new technology and emerging technologies, and especially blockchain, we won't be relying on corporates or countries or institutions. We will be asking how authentic and how genuine that data is. People will invest on the genuinity of the data, not on that this is the guaranteed by this or this is guaranteed by this. So genuinity of data is the key. Increased liquidity with ease of trade, we have already talked about it. Takaful insurance, which yet to realize its full potential. Why is that? Takaful hasn't been picked up the way we were expected. And I think, again, this is an opportunity for Takaful companies to automate their processes. And I can tell you one of the examples of public information, so I can talk about it. Almost 10 years ago, we have in the UK, one of the Takaful companies came to the market with a £60 million paid up capital, which is huge. 2 years, liquidated and gone. Right? The reason being management of the funds. There were almost more than 100 people in the first 6 months working for the company because the entire process almost was manual. Then what else are you expecting? If the same model, if you have a digitized model, instead of 100 people, you need 20 people. And you can get the same results. But how? As we know in a takaful, let's say in a health takaful, the whole process is automated, where you go to the system, you contributed your contributions via smart contracts. It will go to the pool of funds. The pool of funds have already been instructed using smart contracts that where the funds are going to be invested, in which funds, the allocation has already been instructed using a smart contract. To which Sharia compliant investment these funds will be invested. Job done, right? Now, if there is any issue, if there is any incident, and they need to claim, what would happen? They can go to the system again, send a document, send a documentation like their prescription, hospital bill, that being recognized by the system. With the use of a smart contract, you can process the claim, not only process, in fact you can dispense automatically benefits to the parties. Right? So rather than you wait for few days for the reimbursement, you can get the reimbursement maybe on the real-time basis. Right? So that's the level of automation we are talking about. But someone needs to do it. But again, consortium. Build a consortium. Bring your stakeholders together. Explain them what it is. If I would say, oh, I have built a smart health takaful, and without explaining people what it is, first of all, people would say, what is blockchain? I don't want to get into it. But if you bring your stakeholders, if you explain them, if you make them aware how it works, what it is, why you will be using it, what are the benefits you as a consumer or a customer you are getting, then people will be So I think this is, we feel, is the next level of automation requires for Islamic banking. Murabaha, our favorite topic. I think this is Murabaha needs to be automated, and it can be automated. I've raised this question a month ago. There was a session with some of the practitioners in London. And I can tell you there were some of the key stakeholders of the commodity, from the commodity trading, they were there. And of course they were not accepting it, that it's going to resolve the issue. But if you look at it, how Murabaha can be automated. As we discussed earlier, smart contracts. You just digitize all the operational aspects of Murabaha. You don't need brokers. Why you need brokers? Right? We may need brokers because of the transaction, right? Because of the need from the Shariah perspective. But that even can be, the brokers can be on the platform. So once brokers are the stakeholder, then the interest is aligned from the Shariah perspective. We can standardize and automate the whole commodity trade process. What it brings, I always hear from my colleagues that no, commodity Murabaha is very expensive. How much do you pay? $50. Right? Yes, but $50 still is a cost, right? So we can reduce the cost by automating the process and disintermediation, right? So when we remove the brokers, when there is no physical requirement of the brokers, you can reduce the cost of the transaction. Auto ownership status change of each bond and its underlying asset, and providing participants again with a single source of truth and single view of transaction record enforced through consensus mechanism. Smart Waqf, untouched area of Islamic finance, unfortunately. And in last week or 10 days, I have met several people here. And with some of the discussions I had, there's a wonderful work is happening here for Waqf, cash Waqf, where one of the institutions, they are giving money to students who are in need, which is a wonderful project. And this is the best example of Waqf I think I have seen personally, globally. But how it can be automated and how we can make the use of Waqf in a more practical manner, this is important. I was in Indonesia, and we have worked on the transaction where around $46 billion worth of land is available only in Indonesia, which is a Waqf land, right? And so we were looking for a transaction where we were acquiring the Waqf land to make it for the commercial purpose, and all the proceeds, or most of the proceeds, we will share. We were discussing to share it with the Nazir, the Waqf owner. What was the problem? So we went and visited Jakarta, and literally the heart of Jakarta, and the property prices you can think of. There was a land which was literally the empty land, was not using for anything. So we said, we are happy to acquire this. Now the issue arises where the category, you need to change the category, because it was for Waqf, for madrasa, for school, or for those purposes, so you need to change the category. So then we reached to the government that how long it takes. They said 18 months. Then we talked to our contacts in government, Governor of Jakarta and others, and it turned down to 9 months. Sharjil, we will do our best in 9 months. I said, investor is not going to wait for that. They wanted to invest $20, $30 million. Now it's a $100 million project. Of course, we couldn't go ahead. Now, this is the real use case for a smart waqf, where you bring all these land, which is waqf land, onto the platform, get the permissions done beforehand, bring the government involved. So when investors are ready to invest, they don't have to wait for that long. And that makes the liquidity management and the use of funds more efficient and bring more money into the waqf. So by using a smart waqf, transparency and traceability of land ownership and usage, right? That's the first thing what would happen, the transparency of land ownership. Who is the owner? Who is the real owner? And what is it used for? And then you can change the licenses wherever and whenever it's required. Reduce operational costs with removal on intermediaries and quick traceability. We have talked about it. Increase of accessibility of waqf project. What it brings? Increase the accessibility of waqf projects. Efficient use of fund, connecting donors to project. People will trust you more. And data can be auditable. Now, the same model now apply on what is already happening in Pakistan. So imagine there's a waqf and they are giving money to students who are in need. How you can bring onto the blockchain and why you need to bring them onto the blockchain. Let's say there's a donor sitting in the UK. They wanted to donate £10,000. But they wanted to know how you are sourcing the students, and once you are bringing those students in, what is the policy, and once you deploy the capital, or once you give money to the students, who is managing their progress. So the entire ecosystem can be on blockchain. So the donor who have donated £10,000, let's say, they can see it that 10 students have been selected and been giving money for their needs. They can track their results, whether they are studying or they are not, how good they are. And on the top, you can engage them for many different activities, which is, for example, you can ask them to give them tuition. You can ask them to start contributing in the system. You can ask them to start mentoring once they graduated to the students. And the entire ecosystem can be managed on blockchain. So there's a transparency which work is bringing. Some of the current applications we can talk about. There's a Blossom. It's a blockchain-based Sukuk issuance. What they are doing, they are using Bitcoin or let's say cryptocurrency to transfer funds, ensuring the ownership. This is the same model what I've talked about, that they are trying to issue micro Sukuk, where $50,000, $100,000 someone wants to raise, so they can issue Sukuk without the complications and the ease of process. There's another company recently been launched. It's called VTAC. They're still early days for them, but an interesting concept. And what they are doing, they have built infrastructure for issuance of Sukuk. Implementation of platform according to Islamic jurisdiction, and they are built on Corda. As I've mentioned earlier, Corda is favorable for financial transactions. But what is the outcome? What VTAG is doing? Improve accessibility by digitalizing process and interoperability with global financial market. Now, interoperability with global financial market is a very important aspect, because global financial markets now can be integrated into these platforms where they can see what exactly is happening, and that liquidity which is still untapped. In the West, there is a huge liquidity which is looking to be invested into the emerging markets, and that liquidity can be facilitated through these platforms to sukuk issued by the local corporates. Coin, this is one of the platforms being set up in Indonesia to support trade. Established on Zilliqa, this is one of the blockchain platforms. And what they are doing to enable Sharia compliant e-commerce, the halal business, they are facilitating using the coin and helping consumers on their day-to-day purchases. Cykube, what we are doing, again, the Sharia-based financial products and services. One of the aspects which we are looking and working and learning from scholars, the fractionalization using blockchain. Fractionalization using blockchain means you can fractionalize it. You can create, so if something is for, let's say, for $100, you can fractionalize it to $1 each, and you can sell it to the market. And you can only do it on blockchain. And this is what it brings. It brings more liquidity to the market. Either it's sukuk, either it's funds, either it's any investments, either it's real estate, right? People have dreamed to buy the property, but they don't have enough liquidity to buy it. If a property worth, let's say, $100,000, someone has only $5,000. So today, with the use of blockchain, they can go and buy shares in that property, right? And what is happening here? It is bringing extra liquidity, which was not there before. So by using this technology, we can facilitate retail investment. Adoption and acceleration. Regulation. It is very important for regulators to understand, first of all, about the blockchain. But at the same time, industry needs to come up with new sort of products using blockchain. As I mentioned earlier, lack of Sharia compliant cryptocurrencies. Why not? Why we don't have cryptocurrencies yet? Right? We can bring cryptocurrencies using assets. You can issue coins using property, using gold. So I think this is, again, the alignment is very important with the regulators, both the regulators, Sharia regulators, which is IFSB, AOP, and IIFM, and central banks. Support. Support is very important, and it's not only government or global Islamic organization need to support growth and provide platforms, but I think scholars, and I can tell you, I've been encouraged after having my discussions with the scholar, and I'm glad that he's sitting in front of me right now, Dr. Imran. When I was thinking about it, that take a sabbatical and how and what more we can do, I start engaging and asking, shall we do it? And I think this support and the support which I have got, that yes, why not? We should try, go and look into it, go and find the solution. That gives us encouragement that we should come up with new solutions. And I think this support is very important from the Sharia scholars, from the regulators, from industry, and from the stakeholders. And unless we all are aligned, we won't be able to take the industry to the next level. Expertise. Again, if we compare ourselves as an Islamic financial institutions to conventional institution, there's not much R&D happening in majority of the Islamic banks. I think we need to put some budget, and we need to encourage our students and researchers to do more and more practical and tangible solutions which can be deployed for Islamic banks using emerging technologies. Awareness. Again, it's a repetition, but awareness is very, very important for everyone to understand. And standardization, which we have discussed earlier, again is important for the industry to grow. So we have seen the use cases. I've left this slide as a blank canvas, and I want everyone and each of you to look around and think of your use case and start thinking and take this industry to the next level. As I said, I cannot do it myself. Alhamdulillah, I have taken this initiative to do it, but it's not that I can only do it. We all can do it. We all need to work together to take this industry forward, to take Pakistan forward, and to, inshallah, take Islamic banking to the next level. Thank you.